Two, one. We are live. What's going on, everybody? Welcome back to another episode 5 of the Weekly ETF Show by myself, Cade, and we got Mr. Thomas Farr. If you guys are keeping track of anything going on, especially in the Bitcoin ETF flows, inflows, and outflows, you're going to want to make sure you're following Thomas. We come on every single week. We talk about what's going on in the macro universe, in the ETF world, talk about what's happening. And so definitely be sure to repost this stream if you enjoy this show. We're getting it out to more and more people. Big shout out to RexShares, by the way, for sponsoring today's show. And investors should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about the RexShares. So to obtain a fund's prospectus and summary prospectus, visit their website at rexshares.com. A fund's prospectus and summary prospectus should be read carefully before investing. We're super excited, as always, to be working with RexShares, one of our longest running clients. Now, we've got a bunch of things to jump into. If you guys aren't already following the ETF tracker account, I highly recommend you do, only because we try and post everything that's going on in the world pretty consistently as it's going out. And so just be sure you're following. A lot of information to talk about. I'll pull this one up just so we have it here. Oh, man, I didn't even have the account shared. One moment. There we go. I was scrolling through it here a second ago, but be sure you're following the ETF tracker. A lot of stuff coming out every single day. And yeah, it's definitely worth the follow if you guys want to stick around with what's happening in this world. One of the crazy things is we've talked about this every single week, but like the ETF issuers continue to enter the market literally at a ridiculous pace. It grows every single time we look at this chart. Me and Thomas have, every time we look at it, there's a higher number, and the trend continues to accelerate since 2020. And so anyways, yeah, the ETF world is exploding. The people buying into risk assets, opting to invest into these markets keeps growing. The younger people are interested. They're hearing about Robinhood. They're hearing their friends investing, changing their life. So in these kinds of markets, people are really trying to get ahead. So yeah, anyways, it's a crazy time to be alive. I'm excited to have you guys with us. Thomas, dude, how's it going?
I'm doing good, man. A pleasure to be here with you. And yeah, look, there's lots going on. I'm excited to talk about the markets, talk about some of this ETF news, and yeah, just happy to be here.
Yeah, man, 100%. There's a bunch of things. We're going to talk about some of the things like you got the Jerome stuff. You have big tech underperforming with Bitcoin moving, with the metals moving. The metals moving a lot. And so we're going to get into those in here in a second. One of the posts I thought that was pretty interesting because this comes up all the time, especially in our crypto circles, is Mr. Tom Lee, of course. And we made an interesting post. Saw one from the Tom Lee tracker talking about the ETFs with the largest exposure to Tom Lee's BMNR, which is probably going to be like one of the more talked about ETFs and plays for a lot of people because he's got so much pull. Obviously, people love the guy. They love hearing him talk. He's got crazy projections of where he thinks Bitcoin can get to. It's certainly where he thinks Ethereum can get to. For people who don't know, BMNR is I believe, the largest Ethereum publicly traded company that's holding Ethereum. They hold some enormous amounts, like 4 or 5% of the entire supply, and they're staking it. So it's an income-generating asset as well. And here are some of the various assets and ETFs that are holding BMNR. We have Global X Blockchain ETF, BKCH, with 10% of their holdings, dude, in this BMNR thing. And a lot of these guys keep adding, like you see the ARK Invest ones. You guys know Kathy Wood. There's Fidelity involved. There's Van Eck. There's iShares involved as well. Give me some of your thoughts on this. Is this the move? Like 10% seems like a pretty intense, like insane allocation here. But honestly, we have iShares right behind it at 8%, 8.3%. So I don't know. Give me some of your knee-jerk reactions off seeing this.
I mean, well, look, I mean, I'm not a BMNR bull. I'm not really an Ethereum bull either. I kind of think that if you want that crypto exposure, buy Bitcoin. And if you want to get a bit more aggressive, I probably like MicroStrategy right now, just based, it's kind of a leveraged Bitcoin exposure. But yes, Tom Lee's he's certainly charismatic and entertaining, and he has a lot of intelligent things to say. But he also, you have to watch him closely because he'll be you know, it wasn't that long ago he was calling for 15K Ethereum by the end of last year, and then by the time we got to the end of the last year, he's like, oh, actually, he's calling for a bear market, and then he's calling, like, his calls are jumping around so wildly, and missing on them by 80% that you kind of have to shrug your shoulders and go, okay, this guy is he's an entertainer. which is like, that's part of the hustle. I mean, I got to respect, one of the things that I think you can learn from him is that there's such a power in being like, people think, oh, Saylor did it with Bitcoin, but I can't, like, that opportunity is taken. But it took someone like him goes around going like, wait, why can't I do this with Ethereum? And look, honestly, the investors haven't done very well out of it, but he has. So I credit to him as a businessman. But I mean, I'm personally not looking for exposure in this asset. That's just what do you think?
Yeah, it's tough, dude. It's tough. I understand the appeal. He's taking a big bet on Ethereum, right? And I think for a lot of these folks, I imagine they are allocated into this because they like Tom. But I imagine it has to be beyond that as well. Like, they have to also be bought into the Ethereum narrative that it is going to be replacing these crypto rails. That, I mean, it's hard to deny. I mean, I'm kind of in your boat, so I'm a lot more interested in Bitcoin than I am in Ethereum. I'm not sure. I'm also not sure what I think about MSTR and Saylor's thing. He's done some crazy stuff. We'll see if that ends up playing out. He's got a bunch of financial instruments that he's created now that I think a lot of people are going to find of interest, like the MST. I mean, there's like MST. There's like 7 or 8 of them now. And so I think for these people, that, like, especially people like Cathie Wood, they're betting big on them being super early on this crypto run. That a lot of these things are going to be on chain. They are going to be run on Ethereum. My biggest risk factor with this is if it doesn't end up being on Ethereum and BlackRock creates their own thing or whatever because they just don't need it. I have no idea what's going to happen here. So I guess it's a good thing, right? So like with the ARK next generation internet ETF, it's only 2.5%. They've got a good amount of diversity here. And so for them, like a lot of these folks who are in the 2 to 4%, they're thinking, hey, look, this is worth the risk. If crypto blows up, Ethereum has been battered and beaten down. Nobody believes it's going to get to 10,000. And if it does, these guys are going to make an enormous bag here. And honestly, like we'll see what happens here. Because if Ethereum runs, Tom Lee Tracker is going to make his BMNR run pretty hard here. And so we'll see what ends up happening. It's pretty interesting watching a lot of these ETF managers come in and out of these. A lot of people have interest in the ARK ones, and we'll see if they continue to. One other thing here, kind of speaking a little bit on Bitcoin, unless you have some more thoughts on Tom Lee.
No, jump right ahead.
Cool, no problem at all. Yeah, so one of the things was we saw daily Bitcoin ETF inflows at a pretty cool number here, over $750 million, the biggest since October. Pretty big difference here. It's a big fat candle here on this chart here. I know you also track these things on Apollo and the Bitcoin ETF trackers. If you guys want to find out more information, just go to Thomas's account here. He tracks all the inflows and outflows. Nice little heat map here. A lot coming from BlackRock and IBIT. And I don't know, just give me some of your thoughts on this. We're 2 weeks into the new year. It feels like a bajillion things have happened. We've got a few different stories we want to talk about. It feels like 2026 has already been happening for like 6 months. It's been 14 days.
Yeah, look, so I mean, it's a very hot start for the Bitcoin ETFs, which is interesting because it runs counter to the prevailing narrative, I would say. And we talked about this, I think, in our last chat, certainly the last couple. Like, I think the fact that you notice this incredibly bearish sentiment across the X timeline about Bitcoin and this 4-year cycle narrative and all this stuff, it actually sets up really nicely for a reversal. And we talked about this before, and it already seems like that's kind of playing out here, where Bitcoin is pumped 10% year to date. And these ETFs do tend to correlate with Bitcoin price action. So it's an interesting one because it's like, what's causal and what's correlation, right? So on the one hand, Bitcoin price moves because there's more demand for Bitcoin, and that shows up in terms of like demand for the Bitcoin ETF. So you get these flows going, and certainly if you're going to have $1 billion or $750 million of buying of Bitcoin in one day, that's going to put impact on the price. But equally, there's a reverse causality there, where as the price action starts running, people start buying into the ETFs, which is quite interesting, the dynamic there. And so the one thing I would say is that 750 mil buying, that doesn't reflect. BlackRock tends to report sort of one day behind. It's just the way they do their reporting.
Gotcha.
So I'm expecting to see another big day. Like, and I'll put out the posts. I'll put out the numbers when they come out. I'm expecting BlackRock's going to announce another big buy today. So that's really interesting. Like, we're going to have another big buy that's coming, and I guess the one thing that we do tend to see as well, which is interesting, is with these flows, BlackRock's buys tend to be quite sticky. Like, they've got nearly 800,000 Bitcoin, and they doesn't, when the price goes down, BlackRock doesn't really sell much Bitcoin, but when the price goes up, that's when BlackRock starts to really accumulate.
Yep.
So this, we'll see how long this trend lasts, but if we see kind of a push back to 120K Bitcoin, 130, 140, 150, like, BlackRock will be at a million Bitcoin holdings.
Yeah, I know.
In real, like, which also, if you put it in perspective, here's where it gets super interesting. So when BlackRock own a million Bitcoin, the ETF owns it on behalf of the clients, but when it holds a million Bitcoin, and Bitcoin is, say, trading at 150K, that's $150 billion that they have sitting in their ETF. And then BlackRock are, of course, taking a clip of that just based on the fees of an ETF. So they'll take 25 basis points. So, that's when you start going, oh, wow, what an absolute beast this is as a business for BlackRock. But then also, you have to understand further the incentive model, where they manage, like, this is still a drop in the bucket relative to all of the other assets they manage, right? And they advise and they provide model portfolios to clients, and first of all, they invest on behalf of clients, but they also advise clients, right? And I'm talking about the big institutional money, and this is trillions of dollars, and the incentive model for them to keep pushing capital into Bitcoin is just so strong, because as this Bitcoin network blows up and they have the centerpiece asset, and maybe, everyone wants to talk about what Saylor's done, and to be fair, it's a different thing, right? MicroStrategy actually own the underlying Bitcoin, but it's almost, BlackRock, like, Larry Fink's got to be so excited about what BlackRock have got, and they were late to the game as well with Bitcoin. Right. They were so, like, talk about, we're 15 years into Bitcoin adoption when they come up with this Bitcoin business, and it's the best Bitcoin business in the world, maybe second to MicroStrategy, but
they figured out a really good thing, dude. Because, like, depending on which circles you roll in, like, if you're deep in these Bitcoin circles, they hate everything to do with the ETFs. You're not holding your own Bitcoin, blah, blah, blah. BlackRock's looking at this like, okay, we're late to the game, like you just said. Not only are we going to make a ton of money off the fees and all the attention we're getting for, like, buying up all this Bitcoin, we're going to be one of the biggest people. Every time we buy or sell anything, all the Bitcoin accounts are tweeting about it. Everyone's talking about it on television. But people are getting exposure to the asset in terms of the price going up and down. So a lot of people, like, probably the most people who hear about Bitcoin are mainly just interested in its price up and down. It's a $2 trillion asset, and so BlackRock's probably sitting back and just loving this.
Yeah, and I think also, like, let's talk about this for a second based on the importance of the ETF, because, you have to understand, like, what people need to really appreciate here is what it unlocks for these institutions. Like, the idea of self-custody, as an individual, it's possible to do that with Bitcoin, but as a corporation, what does it even mean to have a corporate, like an institution, self-custody? Like, for example, let's say Harvard Endowment wants to buy a few $1 billion worth of Bitcoin. What does it even mean for Harvard, which is an institution, to self-custody? Because like, self-custody is a concept of, essentially a person knowing a private key. But what does it mean when it's a institutional self-custody? It doesn't actually, there is no self-custody there, because it's still an institution owning it, used by a group of people. The underlying investors in the Harvard fund don't really, it's not like they don't have this like self-custody type of property. It's not like they can take the money and walk and move to another country. It doesn't have any of those properties anyway. So it's sort of irrelevant, this concept of self-custody, when you're talking about institutional adoption. But what it does do by just simply making it easy with BlackRock's IBIT and these ETFs is it just makes it trivially easy to get access to it. And because of invest in it, and because of the regulations that have come on top of it, which mean that we're normalizing, it's now perfectly legal, and banks are adopting borrowing and lending against IBIT, which is of course the ETF shares that represent Bitcoin. And so you start to normalize, like, for the financialization layer, like credit against it, derivatives on top of it.
Right.
All of these things are providing liquidity for Bitcoin. And then, that is ultimately very bullish for the price, very bullish for the price action. And so I think that these ETFs have been a fantastic thing for Bitcoin adoption. And I know it's just something that, like, the old school Bitcoiners,
They hate it.
They hate it, but
it was always going to happen, though. I mean, and it can be true. You can hate it and also acknowledge that it was always going to have to happen. If it was going to get to this level, brother, the banks were going to get in. They have to get in. And like, I mean, it's one of those things, like, once Wall Street's in, like, they're in, they're trying to make money, and like.
Yeah. And also, like, what do you want to accomplish? Like, if this is just if you're looking to have a crypto that you can send peer to peer, if that's all you want, there's a lot of cryptos out there that can accomplish that.
Sure.
Like, what makes Bitcoin special in a way is its store of value property. It's the fact that you can actually hold an enormous amount of wealth in it. And of course, one of the most important pieces of that is the number needs to go up. The price needs to go up. And so you can't, like, it's ridiculous to be complaining about the necessary conditions for price to go up. Mm-hmm. It's fine if this was 10 years ago and you could rely on retail adoption and all of this sort of thing. That's a different dynamic. But the reality is Bitcoin isn't like a $10 billion asset. Bitcoin is multi-trillion-dollar asset. So this story of, like, you're going to tell your friends about Bitcoin and that's going to help spread adoption. Like, well, everybody's heard about Bitcoin. Like, that's not what's going to happen. That's not what's going to change. That's not Bitcoin's next leg up in terms of scaling in price and also adoption is actually institutional capital, because it's not coming from like word of mouth. It's not like Bitcoin is one great meme away from having like going to $1 million. Some other things might be, right? If you're talking about some kind of like AI narratives or a different crypto asset or whatever, you can have like a great meme that spreads on X and that just changes adoption. But when it comes to a multi-trillion-dollar asset, it's institutional adoption. And it's the same with, it's just maturing. It's like gold. And we can talk about this, it's the same kind of phenomenon, right?
Well, one of the things, you brought up something that was interesting. It's the reason I brought this up. Well, actually, no, wrong page. It was this one. It was something that my friend Matt C had tweeted. I thought it was a really interesting post. And because, like you had mentioned, specifically with Bitcoin, which we can extrapolate to a broader market just for, I think people probably watching this at this point know that you and I are Bitcoiners. So we pay attention a lot to that industry as well. But now that, Bitcoin has sort of entered this extra category of the broader conversation, it's now like it's been a top 10 asset for a long time in terms of market cap. It's a big boy. It's in the trillions now. and I forget who had said it, but they were like, once an asset gets to that level, it's not going back overnight, because the same way that it took a bunch to get in there, there's now a lot of money and a lot of people at stake here. And you're talking about something like the S&P, like our entire stock market. It was kind of a similar story. Like at one point, there was no one really invested. People, like, I forget if it was you and I on a space or stream or for somebody else, but so it's not that long ago that like there wasn't really a time where people were just buying and trading shares of stocks and stuff. Like people were just like farming and doing whatever it was to make money and get by. And now we live in this world where you're able to store your energy and wealth into things. You can call them assets, you can call them stocks, buy physical gold, ammo, whatever you want to buy. And you're able to grow your net worth over time. This tweet was wild to me because I don't know, I had never really seen it put like this. But we've got like multiple different assets he listed here. But he said in 2021, January, if you put a bag of money on Bitcoin, gold, this is iShares Gold Trust, double X, 2X S&P, 2X QQQ, and triple QQQ. 5 years later, your 5 assets would have performed the exact same. And I was mind blown when I saw this. I was like, what? This can't be real. Isn't this crazy?
Yeah, that's kind of mind blowing. It also, to be fair, shows you how, I mean, honestly, gold has crushed it, right? Because if you, like, not that none of us can see the future, right? But if you could go back in time, well, first of all, what would you have rather owned during that period? I mean, you're going to want the one that, like, and yes, returns are the most important thing, but also, like, how about an asset that doesn't have these terrible drawdowns?
Yeah.
If you're going to get the same return, I mean, the reason why I happen to think, say, Bitcoin is a more attractive asset than gold, I mean, one of the reasons is I do think that over a long period of time, yes, this is cherry picking this period where they performed exactly the same, but I do think over a longer period of time, you see Bitcoin outperform gold. And it's more risky. It's also, Bitcoin's going to have much worse drawdowns, right?
Absolutely.
So,
and it's you're betting on one, versus like here, if you get into the S&P 500, you're getting a portion of literally every. I mean, you're getting a piece of America right here. This is all the companies building in America. A lot of companies that people are going to recognize here.
For sure, and that's why, I mean, the desire to not have these horrible drawdowns is exactly why you invest in these kind of ETFs, right? Like a diversified portfolio of all these stocks, because individually, a lot of these stocks are going to get absolutely smashed. But then if you have stocks getting smashed, but equally other stocks doing really well at different periods of time, your overall portfolio volatility comes down. And this also, this gets back to like in academic financial theory, which is essentially you get paid a risk premium for what's called like the systematic risk that you take. But when you hold a stock, and it can have this kind of like one single thing can have this risk that like the management can do something terrible and your stock can halve overnight. You hold a risk that isn't being rewarded for in the market because you can diversify away that risk, theoretically speaking. So it's not like we're talking about the efficient frontier of investing. Are you on the efficient frontier in terms of the risk versus return? Because going back to the previous chart you mentioned, the one chart that wasn't in that comparison of returns would have been a leveraged gold play here, because actually a leveraged gold position was clearly better than all of those in the sense of you wouldn't have if you could, so you don't get the down swings, and you just have this, and you would rip up much higher. But this is the past. I mean, I think it's interesting to look at what the past 5 years or any historical time period, but it's also more interesting to think about what the future holds, right?
Definitely, most definitely. One thing I want to zoom in here, like obviously if you're buying into there are a few ETFs that you guys know, once you buy into them, you're buying a portion of all the best companies in America. A lot of these you're going to recognize, the Amazons, the Teslas, Berkshire Hathaway, of course. Shout out to EMP Walmart's his favorite stock. He says is the best company in the world. I believe it's Arizona, somewhere in that region, one of those states out there where they originate from. He's a big proud owner of Walmart. We've got obviously Wolf Financial, all the inside jokes from Costco and their hot dogs staying the same price for so many years. So you're getting a piece of a lot of these companies. You're basically just betting on that happening and continue to do well. I know there's a few like more meta macro topics that you had brought up that you thought were interesting that you're kind of keeping track of for the week. We have a lot of big tech underperforming. I had even heard and spoken with Ryan Emp from the host of Wolf Financial, Wolf Trading. You guys are all going to probably recognize him. He had talked even a little about some of these things looking a little bit shaky. And then we saw the metals absolutely take off. We've seen Bitcoin take off a little bit. We'll see if it ends up being able to hold this or not. And so, yeah, I know Meta had cut jobs recently. I know some of the big techs were underperforming. Give me just some of your thoughts on this and sort of where some of these companies sit at and maybe like the spread you're getting here. There are certain ETFs that you buy that are heavily weighted in the tech sector. There are some that are very, very evenly distributed. And there's just different ways that people can invest,
Yeah, well, look, I mean, I think it's extremely interesting just to see we have this dynamic where year to date, NVIDIA is down, Meta's down like 7%. You have some of these big techs down, and at the same time, Bitcoin is up 10%. If you go back, you don't have to go back very like a long period of time when it was basically there was this narrative that which is a fair narrative. Bitcoin and big tech were just moving like completely coupled with each other. So Bitcoin and big tech was like the same asset. But that whole dynamic, there's been a huge structural shift in the market, which I think, and I'd be interested to hear your thoughts on why you think that is too. I think that there is an element of Bitcoin, if you were to break down what seems to drive it, it's like a combination of big tech, but then also there's the monetary element of it, and it's that piece which is tied up into why is silver and gold doing so well. And this is probably the same reason why Bitcoin has done well recently, which also the big story of the week gets back to Jay Powell being essentially, well, I mean, his life is at threat, really, not actual life, but the government is going after him, and this is a threat to essentially the Fed's ability, its independence, and its ability to set interest rates.
Mm-hmm.
And I think it's so interesting that Jay Powell has basically said that this attack on me, which is notionally about something completely different, right? They're coming after him because of the building of the spending on a building, the Fed's building, and all this kind of stuff. And Jay Powell's basically come out and said, no, this is bullshit. The government is coming after me because we want to set monetary policy based on what we believe is the best for the economy, based on the numbers that we see. And this gets back to the Trump view, which is pump it up. Pump it up.
You're not with me, get out.
Yeah. And it's extremely interesting. Of course, we know that Powell is going to be out as the head in a few months regardless, right? Just because his term is coming up. But he could stay on as a governor, which means he would still have a vote. And in any case, it's like a threat. You do this not just because, part of the reason why you do this, it's like it's to signal to the next Fed chair. It's the same way as when you have these regulators that get paid and get bought out after they leave they used to regulate the banks, and then they go and become some board member of JP Morgan or something, right? And they get paid a shit ton of money, and it's like, oh, why are you paying them now when they're no longer in charge of regulating you? Is that corruption? It's not really corruption because they're not regulating you anymore. But it kind of is, because it's a signal to the next guy in charge, like, hey, if you play ball, we'll reward you.
Mm-hmm.
Well, what Trump is doing, the other, you know, Trump isn't offering the carrot, he's offering the stick, which is, you know, a signal to future people like, you better play ball or we'll come after you.
Mm-hmm.
And it's fascinating because it is a threat to the Fed's independence, which, if you think that through further, is a threat to the value of the dollar, essentially, because the government itself, the federal government's $38 trillion in debt. They don't want a stronger dollar. You know, you have to go back to these first principle fundamentals. The government is operating massive debt and massive deficit, like multi-trillion-dollar deficit every year. So the government doesn't want to have a strong US dollar because it makes it harder to service the debt, makes it harder to pay off the deficit. What does the federal government wants? Lower interest rates, cheaper dollar, because if the value of the dollar falls, the value of the debt falls, right? That's the linkage here. But, you know, is that good for everyone in totality? Mm-hmm. Well, as an independent Fed, you're not just, your job isn't to worry about the solvency of the US government. Your job is to maintain financial stability. Your job is to not have too much inflation. Your job is to make sure that we have enough jobs and, or you know, not have massive unemployment. And so there's kind of a dual mandate there, but primarily it's like financial stability and not have too much inflation. And so because you have these kind of conflicting desires between essentially different branches of the government, it's creating an incredible dynamic, and it's just absolute like bashing between the two most powerful, arguably, depending on your perspective, the two of the most powerful people in the world, ahead of the US Fed and the president, you know, Trump. So that's an amazing dynamic. And I think that it's not really, like, to be fair, I would say if we were in kind of any other situation in which kind of a slow news, if this was like in August or something and it was like slow news summer, I feel like this would be a much bigger deal. It's just that we're in an environment where everything is, it's like, oh my God, America's going to take over Greenland, America's taking over Venezuela, oh, look at these protests happening in Iran, there's so much, you know, is America going to attack Iran? Like there's a million things happening that you can't, like, people, the media can't even latch onto a story because which is fascinating, because it's you've got this dynamic where it's like, look over here, look over here, look over here, while we're doing stuff.
That's interesting.
So I feel like it is an underappreciated story, but it's still like really early in the sense of what's happening here is it's like a little peek at like, ooh, is this what's happening? Is this what's happening? But it's like nothing is, you know, this could come back to the nothing ever happens meme, right?
Nothing
Like it's not
my favorite meme. Nothing ever happens.
So, you know, to be fair, it's not like there's been massive.
You know what could have, though, if gold or Bitcoin, like, I know gold has obviously done incredibly well. Silver's blowing people out of the water. But if one of those assets had gone nuclear, like, okay, it's almost disrespectful to say silver hasn't, but like if gold or Bitcoin had gone nuclear, like the two main assets that people kind of qualify as like these displacement trades, these like separate from the dollar type of investments that people are talking about, you know, obviously Bitcoin cracking into the six figures this past year made a huge wave, and a lot of people were talking about it. It was all over TV. For a while, you know, Tom Lee, Michael Saylor, Anthony Pomp were like America's favorite because Bitcoin just kept going up and didn't matter what happened, it seemed like. But if one of those was sending, and then this whole thing with the Fed gets called into question, and then people are worried about the dollar, and they're like, wait, are these assets going up? Or is it that Trump just has to have risk assets going up? Or like, which one is it? And then one of the main assets that is like separate from the system is absolutely ripping. I feel like that would be the only time where this kind of story blows up, because otherwise, exactly what you're saying, it's a story over here that's kind of big, and then over here that's kind of big, and you're sort of getting desensitized to this whole thing where you're like, well, probably nothing's going to happen. We'll just kind of inch more this way like we've always kind of done. Most guys says we'll continue to kind of keep just climbing up. And, if we have a pullback, like, is it a pullback? Really just correcting back down to this prior. And it's just one of those things. In my head, it feels like it's a nothing ever happened situation perpetually. It would be foolish to say that will never, like, I understand what the Bitcoiners are saying. Like, they're like, dude, the system has to crack at some point. Like, probably. Like, it's just difficult to know if that will be in the next year or 2 years, or if it's 15 years on the future, or 50. Like, I don't know how long you can keep that game going, because I don't know what the alternative is. Like, the alternative is like insane inflation or deflation in a fast manner where everyone gets rinsed. And I'm like, I don't see anyone letting that happen. There's just no way.
Well, maybe the weird, like, I agree that the most likely scenario to play this out is you have to massive inflation, essentially, which will then show up, and you get pumping of Bitcoin, silver, gold, and frankly, stocks and everything else. But the other fraction of it, like, you call it your probability distribution of outcomes, is you get actually massive real GDP growth. And we have seen, to be fair, the possibility of that, where you get, like we saw, I don't know if you saw this, but a lot of people are predicting like extremely high GDP numbers for 2026. Like, I'm not saying the base case, but if you look at, I watched the All In podcast a couple of weeks ago, and their predictions for this year, and you got, I think, David Sachs, and he's part of the administration. He's going to talk it up, but nonetheless, he was like, pinned down, you have to put a number on the GDP, and it was like 6% that he said. And I think Chamath came out and said 5%. And these numbers are kind of crazy, but also, what the interesting is, they're not crazy. It's possible in the new AI dynamic world, where so much investment is happening in these data centers. It was almost thought impossible, these kind of numbers 10 years ago. In fact, people talked like post global financial crisis, 2010, 11, we had this period for years on end where it was, the Obama years, we normalized GDP is 2%. That was, 1.6% GDP. That's what you should expect. And to be fair, this is like everything that Trump said 5 years ago was like, Trump said even earlier was like, hey, we can get these, like, we should be targeting 4% GDP, 5% GDP, like, but these numbers were thought to be impossible. And now, if it is possible, and it could happen over a sustained period, I'm not predicting it, but I'm just saying, that's the kind of world where you could theoretically grow your way out of the debt problem. If you have so much GDP, because that's we got massive amounts of debt, but if you have so much GDP and it can grow faster than your debt grows, unlikely at the moment, and I have to say really unlikely, because the deficit is running at 7% of the US economy at the moment. So even if you get 5% GDP, it's not going to be good. You're still going to have a growing debt. Like, there still needs to be structural changes. But it is interesting just to think about, in a world, like a hypothetical, like a what if you had a situation where you had 7-8% GDP because robot armies are building things that, like, what if you had 10% GDP because it was driven by robot armies and AI that were building, and while we were sleeping, and you had these crazy numbers. Like, the world could get weird, I guess, is the point. The point there, and
we're going to inch our way there. I think it's just kind of, you've seen Brave New World, where everything, everyone sort of just accepts stuff. It's just sort of normal. But if you're like from the outside looking, you're like, wait, hold on. Or if you're from a different time period, you look at it, be like, how was this normal? Like, have you seen that movie? It's a really old movie. It's like 30 years old.
I mean, I read the book.
Okay, you read the book. Okay, so you understand. Like, it's what it seems like it's going to be. I have no idea what it's going to look like. It might be that it happens fast and it catches us all and blindsides us. I don't know. It's kind of like how you're saying. Like, a few years ago, it seemed a little crazy, and then a year or two later, we're kind of just have inched forward towards it. the media has worked together with the governments and the federal banks, all these people to sort of work together to sort of throw down this idea that, hey, this is the new norm. Like I was talking on a space with Robert, who we do a lot of macro spaces with. And we were like, yeah, I guess we're not getting these numbers. I guess we're getting, the old reports from November now, 3 months later. But by then they don't care. So they're just like, hey, here's November numbers, but don't worry about it. We got to get the next one to look forward to. Like, let's talk about tomorrow. Why are you guys worried about last? And you're just like, well, hold on. Like, this can't be the new normal, but it is. And the next one, it'll be the same. And now we have, like the tariff stuff will be dealt next week. And then it comes to next week. Today's Wednesday. We're not doing it today either. You're like, okay, well, I think we're just getting like sort of tested in like, how far can we push the American people to just like accept less? Like, there was a whole documentary on food that I saw, and it was I think it was like a Matt Walsh or someone, and they did this documentary, and he was just, I'm fed up with it. All the food in America sucks. He was like, the food doesn't taste as good. I'm paying $18 for Chipotle. It used to be $12. The food's not as good. The Chili's down the street is terrible. The service is terrible. He's like, but we've all sort of gotten used to accepting bare minimum and paying more for it because of inflation. And so it's a really interesting concept. I don't know what's going to happen. It just seems like we're going to get more and more of the same.
Well, I definitely think that dynamic is going to accelerate because it's really easy to, it's like there's these mega forces, right? Where you got AI, theoretically, just robots making stuff, no human labor involved, AI. It's a deflationary thing. It makes everything, you can make more stuff cheaper, technologically speaking. Mm-hmm. However, you have this dynamic where if everything is trying to get cheaper naturally, deflationary forces, but then the US Fed we have a mandate, we got 2% CPI target. That means that they're going to get, and that's for across the board for everything. So then they're going to print a ton of money. And then you have this dynamic, which is how it's played out over the last 30 years, whatever. You go, well, yeah, my TV is extremely cheap. I can get a flat screen cheap TV. It's super cheap. I get like these magic, these phones are incredible. The technology is amazing and it's pretty cheap, and like a laptop computer is pretty cheap, and all this kind of tech is like amazing. But then I try and like go to the supermarket and get some food or get some Chipotle, to your point of view, and it's like, holy crap, like, why is this so? And it's because it's like, certain things, the technology is awesome and it just comes down, and my streaming costs just keep going down and down and down. But then also I go out in the real world, and if I need to like hire some labor, or if I need to buy some food or my rent for my house or whatever, so some of these things that like maybe the robots aren't making that much more efficient. Maybe the technology, like, advancements in software isn't making it much cheaper. And so under the hood of that kind of 2% inflation is, this thing is minus 30 and this thing is plus 30. And the Fed might go, overall we're at 2%. But it's like, my Netflix isn't too bad, but my food is extremely expensive. Well, I can get an Uber and it's pretty cheap because, I'm going to have a driverless car come and pick me up, right? So I would think going forward, right, the cost of these things is going to go down, 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 down. But on the other hand, if I need to like hire a nanny to babysit my kids, that's going to be expensive. Or if I want to go out to eat, that's going to be expensive. So you have this weird dynamic where certain things are just going to explode in costs, and certain things are going to get cheaper. But yeah, it's going to create a massive also instability, because the winners and losers out of all of this, which has always been the case, right? But it's only going to accelerate.
Yeah, most definitely. Yeah, that's actually a really interesting point. Like what ends up being expensive in the future, what ends up being cheap. I know from the asset side of things, people are always trying to get ahead. Like, this is an interesting post I saw. If you're buying 10 grand of the VanEck semiconductor ETF, with obviously with the metals exploding, there's a lot of interest here with the semiconductors and everything going on in the tech world as well. Just some interesting ideas. I just wanted to pull up a couple last posts here, kind of while we're on this just a broader finance conversation here for people who are interested, especially in the ETF side of things. Like, it depends how deep and down the rabbit hole you are. If you're a one asset type of dude and you just rather full port into an Nvidia or whatever it is, or Bitcoin or gold or something. But if you're more so like, hey, I just believe in a certain sector of the markets and I don't necessarily know which one's going to perform, the ETFs, there's all sorts of them. This is just one example. This is not specifically SMH here, but there are so many ways you can get involved, you know.
Well, to your point, I mean, I think this is why I really like, for example, like the semiconductor ETF, whatever, because you have to be, you know, like, unless you are, this is your full-time profession, how the hell is anyone supposed to be able to tell you, like, actually Qualcomm versus, you know, Texas Instruments, Marvel Technology, whatever? Like, you're not going to, like, you know, who has a view on this stuff? Like a regular person, or even just like an investor. Yeah. It's so hard to have a view on that kind of, like, a million different things all at once. It's so much easier if you want to, if you might have done enough study to believe in this semiconductor thesis for the AI story, but actually picking stocks, unless that's your profession, it's just like, it's almost impossible to have the breadth and depth necessary to do that across all of these different thematics. So that's why it makes it so much easier when you can just get a diversified portfolio, not diversified in the sense of the theme is all the one thing, the semiconductor story, but at least diversified across, you know, if you're protecting yourself against like bad management or you know, specific geographic risk or this sort of thing. So like, that's why I kind of like, that's why a product like this is quite interesting.
Yeah, 100% agreed. Like there are quite literally so many out. Like if you guys aren't getting invested at all, we almost don't really care what you're investing in. You just have to flip into an investing mindset. I mean, people talk about it all the time. Like I don't know what the 26, nobody knows what the market's going to do. But Trump has been pretty clear. He plans on making sure that the asset owners are they're not going to not hate him. Like he wants to make sure that people are happy in that arena. He's going to do what he can to make sure that people who are investors, because that's the rich crowd. Like that's who he sort of is. Whether or not you believe it, like everyone in politics wants those people to be happy because they're the ones with influence. And there's so many different options. There's no excuse to not be an investor anymore. It can be in something like the VOO, like you're looking at here. If you invested 10K into it 10 years ago, you're looking at a clean 4X. You know, you could be into Bitcoin. You'd be doing pretty well as well. You're definitely doing well if you're in Bitcoin. If you're in any of the metals, you're doing well. But like, you know, you don't have to be doing like an enormous amount of research, like Thomas is saying. You don't have to be a full formal expert on these things. But if you have a general hint, you're like, hey, I think this sector will do sort of well over the next 10 years. That's really all investing is. You're saying, like, where is my money best spent in this cold hard cash that's going nowhere but down, because everybody, it's just not meant to go up in the same way because it's tied to these assets. And every president has made it clear they're going to have to keep printing more. And if we're not happy with the way that the Fed is doing things, we're going to yell at him and until he quits, and we're going to sue the guy into the ground kind of thing. Like, we're entering a very bizarre world. You don't want to not be an investor, right? Like, I mean, there are times maybe, and Robert talks about this all the time in our spaces. Like, there are times where maybe it makes sense to rotate some money into cash. You always want to have some type of position to capitalize. And there are times where the markets gets really, really overbought. You might want to sort of diversify into some safer holdings or cash. But for the most part, you want to be at least in an investing mindset, because investing mindset means you're thinking about tomorrow. You're thinking about the future, that you're going to take care of your family kind of thing. If you're just thinking about, you know, building up your cash reserves, and you're not spending it on things that are sort of like amplifying your character and your avatar in this world, you're kind of always going to be on that treadmill. And the goal is to get off the treadmill of running on real ground and moving forward in life. And so it's kind of like one of the last things I wanted to sign off with. Thomas, like any thoughts, you know, to the investing world out there, whether it's Bitcoin or gold or the stock world, whatever it is, any last messages you want to give out to the people?
Yeah, I mean, look, I think that was really, really well said. I mean, the whole point is you're trying to, what your wealth is you're you know, it's like your life's energy, right? You're working, and then you save, you know, you spend less than you make, and then it's a question of what do you want to do with the excess, and then if you leave it in cash, it just melts away over time. It actually loses value. So then it's like, okay, I need some way to store it and hopefully actually grow more over time. First of all, I want to at least maintain it, but hopefully actually grow more over time. And it comes down to as well, what kind of time horizon do people have? I mean, I think that it's interesting, that chart you saw, you're just looking at the VU, which is it's just the stock, it's the S&P 500 stock market. It's pretty much over a long period of time, it's just gone straight up. But of course, we had the tariffs last year, we had the COVID in 2020. There are these like blips along the way where it can go down. But if you have a long enough time period that you actually are storing your wealth for, you just want to keep buying, basically. You just want to DCA in, keep saving, keep buying. And if the price goes down, give you an opportunity to get a better price. So it's just about having a long-term mindset. And it's about, I guess, as you said, having hope for the future. The reason why you do this is because you're not just thinking about where am I going to be next week or next month. You're actually planning 10 years, 20 years, well into the future. And it's about setting yourself up for the future. So I think that was really well said.
Yeah, and honestly, like me and Sam went on a bit of a shopping spree. Like there can be things that level up your character today. Like I bought some watches, we redid the wardrobe. I got rid of the Walmart clothes. I was like, there are some things that can help me today that will help me level up and make me feel better day to day as well. But I agree. Like you want to put yourself in the frame of like, I want to do better tomorrow. What can I spend money on that is that, not just nonsense, absolute just like another Game Boy game like that. Is that really the thing you need to be spending your money on? Is there something else is there a course you could buy? Is there some kind of thing that you could buy that would help level you up, teach you a new skill? Because you can be an investor of your time, your resources. You could be an investment of so many things, not just money. But generally, if you're not in an investing mindset, brother, you're going to be left behind, and that gap keeps widening. The time keeps constricting as well. Like there will be a time, I think, where, this is for everyone. Like there will be a time where you look back and you're like, God, what was I doing? Like I could have locked in. So make 2026 the year of the lock-in. It's so early in 2026 right now. It's January 14th. So for those who are watching, lock in 2026, lock in with me, Thomas. If you enjoyed the show, definitely be sure to repost it. If you did, give Thomas a follow as well, especially if you're in the Bitcoin world. He keeps track of all the inflows and outflows on Hey Apollo. And so be sure you check out his Twitter account. It's tagged right above our faces, and in his bio has that link. And he keeps you up to date with what's going on in that world. And of course, follow the ETF tracker for those who are interested in this world. We try and keep you guys up to date with everything that's going on throughout the days. And have an amazing rest of your day. We'll see you guys all in the next one. Take care.
See you later.
And 3,